Hey traders, Jason here from Levitt Brothers. So name of this video is Market Breadth Stinks, as you can see, because it does. So I'm going to go through some breadth indicators here. Breadth's been weak for a little while. At first it doesn't matter. The market can do it kind of at once, but eventually like internal pressure builds and it just becomes too much to overcome. And that seems to be the case right now. Breadth, of course, is the number of stocks that meet certain criteria. So sometimes we'll look at, like, is the S&P above a certain moving average? To look at a breadth reading, you're essentially going into the S&P 500 and asking, like, how many stocks within the S&P 500 are above that certain moving average. So it kind of gives you an idea of like what the entire group is as opposed to what's just on the surface. All right, let's go through some and you'll see what we're talking about here. So here is SP 500 versus the Russell 3000 stocks. Number of Russell, or I should say percentage of Russell 3000 stocks above their 5-day moving average. 5-day moving average, obviously a very low bar to get over. Any stock that moves up a couple of days is going to be above that moving average. So the market does well. You should have a lot of stocks above the moving average. So what most notable here is the fact that there have been no high prints, as you can see, for the last month. Okay. So market printed a new high here, and this was a little bit early. Okay, that's fine. Then the market dropped and then moved up. And during this move up over here, there were some decent little runs. Like there was a 4-day win streak over here. There was a 5-day win streak over here. It shouldn't be that hard for stocks to get above their 5-day moving average. And yet you can see over here, there's zero high prints. Okay, so market moved up, down, and up, but on this last move up, a lot of stocks got left behind. As you can see, there was no expansion over here. So definitely a warning. The market can do what it wants in the near term, but if this type of thing persists, it eventually, like, negative pressure builds and it eventually matters. Next up, same indicator, but we're talking about the 20-day moving average and 50-day moving average. Okay, so notable here is that market has been, channeling up, as you can see here for the last month, but the number of stocks above their 20-day moving average have been declining, and the number of stocks above their 50-day moving average, which broke down over here in December and then recovered some, could never even get above the 50% line. So even though the market was all-time high here, all-time high here, channeling up, the number of stocks above their 20 or 50-day moving average was either trending down or flat and below 50%. So like a lot of stocks just have not participated in the market's rally over the last month. And actually, I say 2 months because we're almost at the end of February. Same indicator with the 200-day moving average. As you can see, so market moves up here. That's an all-time high. You have 70% of stocks above their 200-day moving average. Market corrects and moves to another all-time high, but yet we have less than 60% of stocks above their 200-day moving average. Market corrects and moves to another all-time high, and now you have like 50% of stocks above the 200-day moving average, and then not 50, about 55%, but you can see it's nowhere near getting back up here into this range, which is what defined the uptrend back in September, October, November. Okay, so each successive move up had less stocks coming along for the ride. And just for a point of reference, the 200-day moving average for the S&P is like way down here. It's this black line here. I drew it in, I approximated it, but that's about where it is. So the S&P is like really far above its 200-day, and yet individual stocks, you have less than 50% of individual stocks are now above their 50-day moving average. So complete lack of participation here. All right, now we have SP 500 versus the 5-day high low. So how many stocks are making a 5-day high versus how many stocks are making a 5-day low? Okay, and as you can see, as we've, new high here, we had a high print here. That's great. Market came, corrected and then moved up, and we got another new high here, but we have non-confirmation here, less stocks moving up. Okay, and as I said in an earlier chart, there was a 4 or 5 day win streak here, another 4 or 5 day win streak here. It shouldn't be that hard to print a 5-day high when the when the S&P goes on a decent run here, but yet we had less stocks doing that, and it's a warning. And the market can continue on as it wants in the near term, okay? Because when you have, at first it's the weaker stocks that fall off, but eventually this negative internal pressure builds, and the market just can't hold up. Here is same indicator, but with the 1 month high low and the 3 month high low. Okay, and so you can see market, prints an all-time high here, corrects, and goes back up and prints another all-time high. And over here, we had over 1,000 stocks. The high-low is more than 1,000. It corrects and goes back up, and now over here we have like 300. Okay, so definitely some stocks got left behind on this most recent move up. And then you can see with the 3 month data, no prints at a high level going all the way back to late November. Okay, in fact, you can line this up like this high here is like over here. So we had an all-time high here, but a lower print there. Another all-time high here, but still no expansion here. S&P another all-time high, and still participation among individual stocks is really weak. Okay, so each time the market has gone up, less stocks participated, internal pressure builds. It could last in the near term. It can't last overall. All right, and then here is, did I misspeak? That was for 3 month highs, not 52-week highs. But now 52-week highs is the same situation. Okay, like that matches up over here. We got high, 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 and then we got low prints over here. So each time the market moved up, printed a new high. Beneath the surface, there just weren't that many stocks doing the same thing. I don't know what math they use. I don't know how the market could, make 3 new highs in a row, and yet so many stocks beneath the surface just are not participating. Okay, doesn't make a whole lot of sense. It means like a very small number of stocks are carrying the lion's share of the weight, and everything else is just falling off. All right, here's the AD line data. Okay. Oh, this chart here in the bottom is the 5-day moving average of the NYSE AD line. Okay, so it just kind of smooths out the day-to-day prints. As you can see over the last month, we've just had oscillating prints beneath, above and below zero, which is fine. But you have, a 4-day win streak over here. You have a 5-day win streak over here. You'd expect the advanced decline line to be able to print a higher number. Okay, this whole area over here, you have a high print there, high-ish, 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 high-ish. It's all good. Okay, that's what happens when you have an uptrend. Here we have an uptrend, supposedly several new highs printed, but advancers versus decliners nowhere to be found. Cannot move up. So the number of advancers just wasn't as strong as it should be or needs to be in order to support a rally attempt. Okay, here's the cumulative AD line below. Not bad. It moved up, matched previous highs, and it has been mostly sideways for 5-6 months. During that time, the market has moved up. This has moved sideways. It's okay. I'd say of all the indicators I've shown you, this one is like not doing too badly. It doesn't have to always move up. Like it can definitely pull back and move sideways for a period of time. That happens. The issue here is it's moving sideways for so many months. It just isn't. Supportive of an uptrend. Okay, last chart. This is SP 500 versus the 10-day moving average. The 10 and the 50-day moving average of advancers versus total stocks. Okay, so number of stocks that are advancing relative to the total number of stocks. It's going to be similar to the AD line. So you have the market channeling up here, but advancers as a percentage of total has been channeling down there, and it's been channeling down there. Okay, so beneath the surface, less and less stocks participating. Okay, and even if you dig in a little bit, you have a decent print. That's a new high. That's a decent print. That's not a decent print. Market corrects and moves up. You get a new high over here. But look how many less stocks were advancing versus the total number, and this number is also lower. Okay, so it just shows you that in this very last push up, complete lack of confirmation, lack of support, lots of stocks not participating. Okay, so this has been the case. If you only look at the S&P, if you only look at the NASDAQ 100, we've had some all-time highs printed. The market seems to be in good shape. If you look beneath the surface, participation has been weak or declining, not supportive. Less and less stocks have been participating with each move up, especially on this last move up where the market moved up again, new high, and just advancers not there. The high-low data on various look-back time frames not there. Number of stocks above key moving averages not there. The question now is, are we going to just get a normal pullback with an uptrend, or is this going to morph into something that lasts a little bit longer? We'll see, but the warnings are there. If you're a long-only trader, just know that you don't have to always trade, okay? No position is a position. It's perfectly fine to sit out for periods of time. Most of the money you make over the course of a year will be in bunches. You'll make a bunch of money in a 6-week period, then you'll have 2 months of really challenging time, and then you'll have an 8-week period later in the year where things are like perfectly in sync with market conditions. And you make most of your money in small batches during the year. You don't need to trade every day. You don't need to trade every week. It's perfectly fine to say, this is my trading style is not in sync with the market. I'm not going to trade. I'm going to wait until things change. Okay? Hope you got something out of this. Good luck. See you next time.